Happy Saturday, everybody. Guys, mortgage rates are crushing demand in this market. We're going to take a look at exactly what is happening with demand and how it will transpire over the next few months. My name's Ethan Flynn. I am a CPA, I'm a realtor, I'm a real estate investor, and I'm not trying to get anybody to buy or sell in this market, but I am trying to educate people on this market. And if you have made that decision, I would love to help you with a data-driven strategic approach to your real estate transactions. Now, in this video, we've got all kinds of maps based on zip code and price band, so you can see where the areas of most inventory are relative to contract volume. So without further ado, let's get into the data. First things first, housing affordability is at an all-time low. Now, this is nationally, and you know Nashville. I've already showed this chart. I haven't pulled it up recently, but Nashville's even worse than the average affordability across nationally. So the National Association of Realtors are saying that housing affordability is at its lowest on record, and it is only getting worse with higher interest rates. Keep in mind, guys, we're only about 4% from peak prices here, and now we are experiencing mortgage rates well into the sevens. So it makes sense that affordability is even worse than it was before. It's got to be solved with either prices, interest rates, or income. One of those things will solve this market, but right now it is historically unaffordable, and certainly there are going to be areas where prices go down. If you're in a low cost, highly leveraged area, highly leveraged just means lots of mortgage, 3% down, 10% down, less than 10% down. It's a highly leveraged area. If everybody in the neighborhood is like that, you probably don't want to buy in that neighborhood. You've got to be very careful. Now, in Nashville, when we look at Middle Tennessee single family, we see that inventory is basically flat, but it shot up in the last couple of days. Actually surprised me that we actually had a week over week increase, because it was kind of puttering around the past couple weeks. Now, this increase was not due to some like surge in new listings. It was actually due to contract volume tanking, which got me asking the question, why did contract volume tank? Now, there's two reasons this could happen. Either A, buyers are sitting on the sidelines and choosing not to buy, or B, active listings that went under contract are now going back to active. So the first thing I checked was, are people canceling their contracts? Let me show you. The answer to that is actually no. They're not actually canceling their contracts any higher than they have been this summer. Okay, July was actually a worse month for contract cancellation than now. So you can see just in the past couple of days, about 17 per day went back to active from under contract. That's really not significantly higher. So we'll see if this changes the next week, and maybe it does as interest rates just continue to pound the market. We'll see if this changes. But right now, back to actives have not changed. July was a worse month than August. Okay, the other thing I checked was, well, are sellers starting to discount their prices? Now, this one was also interesting, because the answer is yes, they are, but not extravagantly. In fact, since August, they haven't discounted their prices anymore. So what I did was I took the percent of active listings that had discounted their price from original listing. And you can see back in May, where we peaked in contract volume, by the way. When demand peaked, that's when the percent of active listings that have discounted troughed. So we were at a low of this year of 30.1%. We're now up to 36% of active listings discounted. Now, I would say that this is not dramatic. Okay, this is not dramatic. You can see two major changes that happened in January. One, a dramatic drop from over 40% to closer to 35%. And then another one, as all that contract volume really filtered through into the spring, and we had a much stronger spring than maybe I expected, it dropped from 35 down to all the way to 30. But once demand contract volume peaked, it has been increasing ever since. And I suspect that over the next couple of weeks, we'll see this creep up. Let's take a look at active listings discounted by price band. You can see this orange line is the 700 to $1 million. They're actually over 40% right now discounted from original list price. This is significant. So to me, that would be where maybe the softest market is. So let's go on over to the maps and see if we can see 700 to $1 million, where is the heaviest inventory? Now you can see when I look at this map, The core of Nashville is actually tighter. And as you get into the outer bands of Nashville, you can see it's a lot looser. Now, Lebanon, there's a lot of active listings relative to contract volume out there. Okay. Again, this is 700 to a million. You come down here to Murfreesboro, just south of 840, 700 to a million. There is a little bit heavier active listings, but to be honest with you guys, there's just not much out there. So it's not a whole lot. But in Spring Hill, active listings 54, contract volume 9. Okay, that's a 6-month supply. That's pretty strong. You get into Fairview area. There's another softer area out here in between Dixon and Franklin. And then north of Nashville, there's not a lot of active listings, although 37209, actually, this is a surprising amount of active listings. 114 to contract volume 16. That's a 7-month supply of active listings in the 700 to a million range. Now, why that's important is 37209 encompasses the Nations. It encompasses a lot of, it encompasses Sylvan Park too. A lot of Sylvan Park is in 37209. So Sylvan Park and the Nations have a lot of active listings relative to contract volume for that 700 to a million price band. That is surprising me right now. I am very intrigued by that. Something to keep an eye on. And there's a lot of, 114 is a lot of listings. So definitely an area that could get pretty soft over there. That's surprising. I'm surprised by that. Let's look at the other areas. Let's look at under 700. So under 700, there's really not a lot. Okay, 37073, 60 active to contract volume 9. I'm guessing that's a new build. I haven't looked into it, but there's a potential area where there's actual inventory. And by the way, to have a 6-month supply of inventory in under 700, there's got to be a lot of listings over there. Come down here in between towards Fairview. That's a little softer area. And then down here under 840, again, there's just not a lot of activity over there, but there is, relative to contract volume, there is a lot. Over a million, you can see, again, Lebanon, there's a ton of $1 million listings and very little contract volume. Columbia, same thing, 38 and only 4 contract. 8 in 38451, there's $8 million listings. None are under contract. So you can see it's also softer. We spent some time last week, so I won't hit that too hard. Now, that being said, guys, the big thing here is, by the way, look at Williamson. Williamson contract volume is absolutely falling through the floor. Williamson County. Now, I talked about this as being an opportunity. If you look at these counties or these zip codes that have high inventory, even though they have high contract volume, if this contract volume tanks, all that inventory will be sitting out there just waiting to be sold. There could be an opportunity. So we're going to keep a close eye on that. That'll be interesting. If this was helpful, please click like and subscribe. It does help the channel. And my passion is to help people understand the current market environment they're in so that they can make an educated decision. I want to be the most data-driven, most strategic real estate resource for buyers and sellers here in Nashville. Please reach out. If you have any questions, I would love to help you. Click like, subscribe. Can't wait to see you next week. Have a fantastic weekend.